Now I need to add that. Can you tell me if the YouTube sound is working now? I think I may have fixed it, but I need someone to let me know if I fixed it or not. Computer. Now I need to add that. Still no sound? Can you tell me if the YouTube sound is working now? Cool. My computer like reset itself last night to do updates or whatever. I didn't do anything different, but somehow that must have stopped it. Anyway, so what I was talking about is that Netflix just announced a 10-for-1 split, right? And splits are kind of fascinating to me because I like when sound is working now. Stock as a split as a trader. My computer because like reset itself. I don't like to trade Netflix. I don't like to trade. I didn't do anything different. Spreads are just kind of too wide. Stopped it. Anyway, so what I was talking about is that Netflix just announced a 10-for-1 split, right? And splits are kind of fascinating to me because I like when stock first of all. Stock as a split as a trader. My computer because now you reset itself. I don't like to trade Netflix. I don't like to trade. I didn't do anything different. Spreads are just kind of too wide. Stopped it. Anyway, so what I was talking about is that Netflix just announced a 10-for-1 split, right? And splits are kind of fascinating to me because I like when stock first of all to be able to get a little bit of a my computer because now you reset itself. I don't like to trade invest or whatever. I didn't do anything different. Spreads are can't buy $1,000. Anyway, so what I was talking about is that Netflix just announced a 10-for-1 split, right? And now splits are kind of fascinating to me because I like when stock first of all to be able to get a little bit of a my computer because now you reset itself. I don't like to trade invest or whatever. I didn't do. Let me know if that fixed the echo. I bet it did. It's so weird that this was registering this one sound. This was registering this one sound thing, but wasn't whatever. Let me know if that fixed the echo on the YouTube. What was I talking about? We're going to have Apple earnings coming up in 15 minutes, and I'll keep playing with sound things. Yes, that's it. But now you can do fractional shares. So investors don't have to be like, oh, I can't afford a $1,000 stock, but I could buy a $100 stock, because they can buy fractional shares. So to me, you don't get that investor premium anymore. I don't know why. I don't know why for anything stocks go up on splits, but from a trading perspective, it'll make it much more tradable. So we got Netflix going up after hours. We got Amazon going up after hours. Amazon crushing. There's a lot of worries about this Amazon. I was expecting down. You know, we do the whole bagel to head thing once in a while. And I expected Meta down, which I was right. I expected Google up, which I was right. But I expected Amazon down, and Amazon's up. And my expectation on an Apple is sideways, more or less. You're just not a huge movement. Maybe up a bit, maybe down a bit, but I'm just not expecting a lot, honestly, from Apple. So we'll see if I'm right on that bagel to head prediction in 13 minutes or so. Taking a quick look at these Amazon numbers. They see their fourth quarter net sales. It's a little beat on expectations, it looks like, on fourth quarter net sales expectations. Fourth quarter operating income also looks like it's pretty midpoint on the range, actually. So the guidance isn't too exciting. AWS growing at a pace we haven't seen since 2022. That's probably what's doing it. It's that AWS headline from Jassy. Yeah, AWS numbers are looking pretty good here. All right, because that's been the big concern. The big concern is that AWS has been slowing on their growth compared to Microsoft Cloud and Google Cloud. But AWS has been slowing down. So that was the big worry. And Jassy, the first thing he's saying is that it's not slowing down. It's growing at the best pace since 2022. So that's probably the biggest thing that's moving Amazon right now. So Amazon's up big. We're waiting on Apple. We got Reddit out here after hours. Reddit is all over the place, but is currently up now. So Reddit's up too. But Netflix is the big surprise. I don't think anybody was expecting that one. What's Coinbase doing? Coinbase is also up. And I assume that the NASDAQ's trading up a little bit from the close. Yes, it is. NASDAQ's trading up pretty decently. Netflix split adjusted trading is expected to begin November 17th. November 17th. All right, so, man, there was a bunch of stuff I really wanted to talk about today. It's just tough because it's the Apple earnings day. But today I gave the most bearish morning meeting that I've given in a while. And it's interesting because if we go to the daily chart of the SPYs, it was just on Friday last week that I think I gave one of the most bullish morning meetings that I've given in quite some time. Market setting up for a huge breakaway gap back last Friday. Huge breakaway gap to the upside. Expectation of a ton of performance chasing coming in from underinvested hedge funds. Short squeezing additionally from them as well. And that's right as we are entering the most bullish seasonally period of the year. I want to pull up again this chart that was in Pat's note from Bloomberg Financial. Deutsche Bank is the source on here, that was posted in his morning note from yesterday that I forgot to mention. So this is just a map of seasonality going back to 1928. We are basically here, right? October 27th. We are basically here. We're a couple of days past that now. So look what traditionally happens into the end of the year. And my understanding is that this is especially true in an up year. When the market is already up on the year, it tends to be able to go up even significantly more. So we have just entered the most bullish seasonally period of the year. And we understand the flow of fund dynamic for why that is, right? The buybacks are just starting to turn back on right now. But the interesting part is we just ended, the flip side is we just ended the most seasonally weak period of the year, the September-October period. And I want to note a couple things statistically. One is that while September is usually a down month, it is an up month when there is a non-recessionary Fed cut, which is what happened this year in September, and we did have an up month. And then October did deliver on its volatility to some degree, right? We had our big October 10th pullback and a solid week of volatility after that, though we never actually triggered the CTA sell triggers, which would have been really interesting if that actually happened. But now we are in the seasonally bullish period of this market. Yet I gave one of the most bearish morning meetings this morning I've given in a while, and that's because I felt that there was just this perfect confluence of things kind of coming together that could bring the market down today. And still, from a flow of funds dynamic, there is some downside risk from vol control that can come in, from the CTAs that can come in, and from ETF leverage rebalancing. But that's if any of it ever triggers, right? It has to actually trigger, and it's going to be significantly more difficult to trigger that stuff when you have a massive corporate buyback bid underneath the market. Citadel estimates that the average corporate buyback in a typical day over the course of the calendar year is about $5.6 billion. And what I would note is that they just take that number and they just do a straight average. In fact, you get periods of time where it's much lower. Like this October period, I bet that the average buyback has been somewhere between 1 to 2 billion. And then you're going to go into a period like November or like last August, where they're probably buying back more like $8 billion worth of stock a day. It's just a rough estimate. So really, really hard to actually be able to pull back and trigger any of that systematic selling when that bid is coming online. But it's not fully online yet. The corporate buyback bid should be back to like maximum buying, I think, starting on November 7th. So it's not quite there yet. And what I was looking at this morning was a market that is still very extended to the upside, right? We got short-term tactical in the red zone for like 3 trading sessions in a row. We have extreme upside extension by my measurement in the market happening for 3 days in a row. And we know that market upside extension based on those factors very rarely lasts beyond 3 days. So I'm not surprised at all from a technical perspective that we pulled back today. In fact, that was the expectation. So one, from a technical perspective, I felt we really should pull back today. But on top of that, when you kind of combine that with the news that we were entering into today's trading session, to me, it all seemed negative. And now maybe Amazon and Apple are saving that. You know, we'll see what happens with Apple in 6 minutes. But coming into today, it seemed pretty negative. And there was a few things to highlight, right? From the macro front, we had President Trump and President Xi have a meeting yesterday, and they announced that they're taking a pause on a few things, including the 100% tariffs, which, by the way, was already fully priced into the market because Trump had tacoed on that within 2 days of him basically announcing it. So there's no surprise there, and surprises are what actually move markets. And I was of the opinion that the market was expecting more to come from this meeting than what actually came from it. What came from it was, all right, we're not going to do 100% tariffs. China's going to open up rare earths. They're going to buy some soybeans. And we're going to reduce the fentanyl-related action of the tariff by 10%. So that brings the overall tariff rate on China from 57% to 47%. I think that based on how the market moved into that, as we knew that the meeting was going to happen and everything else, I didn't think it was enough. And 47% tariffs still does some serious damage to both economies in the United States and in China. So I didn't think it was enough. So that's one on the macro front. 2 on the macro front is the Fed yesterday. The Fed was hawkish yesterday. The most incredible thing to me, we have a headline right now. U.S. Trade Representative Greer, Blackwell's not on the table for China right now. A NVIDIA-based headline. And NVIDIA is not moving on that at all, at least not yet. Anyway, so that's Trump and President Xi. 2 is the Fed, right? Fed came in much more hawkish than expected, and I've only got like 3 minutes now to get through this. Fed came in much more hawkish than expected yesterday. The most impressive thing to me yesterday was the degree to which the NASDAQ was able to bounce back. The IWM did not. It maintained its relative weakness, but we reduced the probability of a cut in December from 92% to 72%, and they kept the quantitative tightening on for an additional month longer than expected, and you had one member of the Fed disagree and say that there should be no cuts at all. So that came off to me a little bit hawkish than otherwise. I was surprised we held up as well as we did yesterday, but I attributed that more to market structure than anything else. And then today I thought we could actually get some of the follow through the downside. And then 3, and perhaps the most important one of these, is Meta. That Meta earnings report I thought was really bad. Some of the miss on the top line stuff is attributed to like a one-off tax expense. Fine, that doesn't really matter too much. The guidance I don't think was good enough. But on top of that, I think that the market is starting to maybe show some signs in certain areas of getting sick of the degree of AI spend. And when you think about Meta specifically, this is what I was talking about in the morning meeting, Meta looks like they are the most behind compared to these other companies that are investing heavily in AI. They're behind Google, they're behind OpenAI, they're behind Microsoft. They're spending like crazy, but they're behind. It's not coming together for them. It's like they're throwing everything at the wall and hoping that something sticks, and it's not really working. I didn't even know that they had a Sora competitor until basically just yesterday, and I hear it's come and gone, but they're spending so much money on that. And then they announced that they were going to issue new debt. And this is a bigger topic that I don't think I have enough time to talk about before Apple hits right now. But like, they shouldn't be issuing debt at this interest rate, in my opinion, at where rates are right now. They should have enough free cash flow coming in, and honestly, still the debt that they issued when interest rates were near zero should be enough for them to hold themselves off until we can get through this cycle right now where interest rates are going to be working their way down, because we're going to get more and more cuts that are going to be coming over time. To me, that's a concern. And it's happening right after Oracle yesterday through today. Oracle today, you know, was another short call out. I've been calling Oracle short like every day, including today as a short trade. Oracle started to get smoked yesterday on their swaps getting bid up, which, you know, shows that the market is not down with what Oracle is doing insofar as how much they're spending to try to keep up on the AI trade. And you see it in the stock price. This thing has not been performing. Now, Oracle, I think, is in a little bit of a worse situation than Meta or Google or any of the others because they're going free cash flow negative in order to try to compete. At least when you look at Meta, we know that Meta is an absolute and utter cash flow monster. Absolute monster. And that's not going anywhere. So if they want to burn $1 trillion, you know, they can honestly do it. Though at a certain point, the market's going to get annoyed with it in the same way they got annoyed with the metaverse situation when that actually occurred. And that led to a huge selling of the market until it flipped. So the big thing for me, and I've been saying this on repeat recently, and I'll probably leave this as almost a final thought before Apple hits, is that it's not a question of if AI is going to change the world. It is. It's a question of if AI is going to change the world but also create revenue that justifies the amount of spend. And I would argue, personally, that the answer to that is no. And especially when you look at Meta, that looks like they're doing a relatively bad job of it and falling behind kind of compared to the other ones, that they're just doing this insane further increase in that spending, issuing new bonds, right as we're seeing Oracle kind of sell off. So I like the idea of trying to push Meta for downside today. Though obviously, by the time it opened, it gapped down huge. I prefer it short versus like $700 or so. We got 25 seconds until Apple's supposed to hit, so let's prepare for that. So, you know, the gist of it is all that coming together, all that negative top line, headline stuff, macro and micro, in conjunction with a market that has hit extreme upside extension, makes me want to be significantly more bearish, and why the morning meeting was so bearish this morning. All right, Apple. Down. Initial reaction is down. Greater China revenue is a huge miss. $14.5 billion versus estimates of $16.43 billion. Huge miss on Greater China revenue, and that's a big one to watch for. That's interesting. EPS beats. Wearables beats. Greater China huge miss. iPhone revenue, I don't have an estimate. Mac revenue beats, who cares? Fourth quarter total revenue beats by a small amount. Very, 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 very small beat. Basically in line on fourth quarter revenue. Total operating expenses is above expectation. Services revenue, it's an important one, beats by a little bit. I don't think this report's good enough, and that China number's gross. Products revenue misses. America's revenue misses, whatever that means. I don't even know what America's revenue, or just general America revenue, I guess. Apple declares a cash dividend of 26 cents per share. Yeah, fourth quarter rev is a pretty small beat. Excuse me. All right, so we have an initial reaction low of just below 262. Is NVIDIA getting hit now on that headline? Nah, just a little bit. 90 cents so far. The big miss is the Greater China revenue. Everything else is like okay. But I just think, I don't know, Apple's up so much in the report that I think this is an example of a good report not being good enough. The only standout problem there, in my opinion, that's an actual problem, is how bad China missed. Everything else is fine, but not fine enough. And it's up so much in the report that I would expect that this thing should be able to go down on that. Can someone remind me what we were pricing in for the Apple move? $9.30. Thank you. We closed at just above 271. So like 262 is the measure. Did we hold the measured move perfect down there? Pretty much. On that initial reaction, we did. It's so incredible how that happens. That's why it's great to know that expected measured move. A lot of times, even if they're going to break it, they hold it as support or resistance, at least briefly, unless the report's a complete and utter disaster. So measured move was down to like 261-ish, I think probably slightly above that. And it went to 261.78 as that low. That's pretty incredible. It's a pretty incredible bounce back now, too. My broad expectation coming into the report is the same still now. It's a muted move, but to the downside is now my expectation. Which, you don't have to be a genius to say that. It's exactly what's happening. Yeah, so Qs are up more on Amazon than they're on, and the other reports than they're down, and Netflix, than they're down on this small move lower in Apple or the 60 cents that NVIDIA is down off that headline. September quarter records for total company revenue, iPhone revenue, and EPS. Services revenue reaches new all-time high. It's time to increase the buyback. Maybe Apple should take itself private. just I'm joking, obviously. Just take all that money and just make yourself private. Stop buying back the stock. Just buy the whole thing. Conference call will be at 5 o'clock. Alright. I don't think I'm going to trade this. So we can kind of just go back to the regular gist of our meeting. I kind of got through the major points that I wanted to say. I just did it as quickly as I possibly could. So the bottom line is that there was a lot of negatives coming into today, technically and kind of fundamentally for the market, though it's been so hard for this market to actually move down. And even today, like, we were weak for 10 minutes and then had a hell of a bounce back. And then it was like a grind lower from there that was weaker in the Qs than it was in the IWM or in the SPYs. But then finally that kind of rolled down starting at 2 o'clock. Last 2 hours we really did kind of roll. And we closed weak. We closed at lows, though as of right now we're probably going to gap up because of Amazon and Netflix. The market at lows here is just into the 80 and the daily, though. So the extreme upside extension is now fully satisfied. So if you're an aggressive dip buyer because the market's broken out, you can be long versus today's low. Personally, I think that's a little bit too shallow. I'd rather be long versus like 675 in the SPYs. I don't want to pay up to 682 on that. You know, if you could be long at a price of like 677, 678 versus 675, it's probably a little bit more worthwhile to see if they hold previous resistance, which is actually slightly lower than 675. Previous resistance is future support. Because otherwise, you know, it's just this is going to be really interesting November because I think there's like a confluence of factors that are ongoing at the same time. You have so much seasonality that is bullish. Corporate buyback bid is going to be so unstoppable this month. You still are going to have the same other gamma dynamics that have been helping to insulate this market from any down moves. The retail bid is probably going to be back in November as well. Typically retail is very, very strong. The technicals here are bullish. The only thing that could actually overwhelm those buy flows, in my opinion, would be as if the market decides it is now Apple's green. Would be if the market decides that it's sick of the AI trade, And while I think that Oracle and Meta are kind of canaries in the coal mine there, I'm not sure it's enough. Oh, and I guess there's one other factor that we really got to start paying attention to starting now, I think, which is the government shutdown. I think come this weekend and early next week, there's a real chance that for the first time ever, the government shutdown matters, especially if it means that we got children going hungry in the streets because we got rid of SNAP benefits because these stupid politicians can't figure out how to help the kids. So we'll see how that plays out. The flip side is that the government coming back online will probably give this market a big boost also. And I read a research note somewhere from somewhere on the sell side that they do expect now the pressure to really ratchet up on these politicians for them to get something done within the next 2 weeks. So hopefully the children only go hungry for a week or two. Say that as sarcastically as I ever possibly could. And we got Apple Green. Tim Apple saving the market. I was joking about saving the market because we actually had just one tiny down day after the market went parabolic to the upside. But Amazon is really what's saving the market. Netflix is saving the market, and Apple going green. It certainly doesn't help. It doesn't hurt. I mean, it doesn't hurt at all. That's all I got, guys. I'm happy to answer any questions. I know that question came in right as the meeting was started. Let me see if I can scroll up and find it. Why can't I find it? Oh, there it is, from TT. TT with a question on his Micron trade from today. Let's have a look. I shorted Micron on the 10 a.m. candle. Boom. After waiting, I cheated a little for the pivot. So I waited for the pivot. All right. So you got a little bit of a pivot high here on the 955 candle. A little bit of a doji as it snapped all the way back into its equilibrium area. So you're into the equilibrium area and you're testing the opening high and you get a doji there. And that's what's the market doing at the same time? Market's giving a really strong bounce back. Remember, I was saying at like 9:55 that you could look for a market-related short. And then we got the signal, by the way, for the market-related short that I called out at 10 a.m. Which, by the way, give myself a pat on the back on this one. That was a pretty damn good short call out. Called out the high of the day today. And I called it out in a way where you could have gotten excellent pricing on that. But back to TT's Micron trade. So we're at a point here where I think that the market can go on your side. So I like that. Going back to the actual Micron chart, you have the doji that came in, so you got a little bit of a signal there. And then you're saying that you shorted in the 10 a.m. candle, presumably versus the high of the previous candle. I like everything I'm reading so far. So you were sized for 5 units with an entry of 226.65. That's a phenomenal entry price, by the way. After seeing notable pre-market weakness in Micron. So you're shorting a stock. You're telling me I also have identified that the stock is relatively weak, so I love that. You covered 2 of your 5 units at 225.83 just to get the risk covered. Great, love it. It's a very quick cover, but it's not about making money. It's about managing risk. I love it. 1 unit at 225.31. Fine with that as well. Now you're making sure that this is not just going to be a break-even trade, but you're going to get a little bit of a winner out of it. Next one at 224.80. Personally, I would say that that's maybe a little bit tight at that point. You're already in a win-win situation with this trade. So you got, 2/5 of your position left. That's probably where I would start to look to be a little bit greedier. You probably still want to take that one off on the way down and then maybe hold the last 1/5 as a runner. But I would probably look to be a little bit greedier, honestly, than the 224.80. I know it seems like a big move and you almost caught the bottom. But, you want to make sure you're maximizing your reward. But fine. I'm really, I'm being particularly picky when I say that. You did nothing wrong. And then you left one as a runner. Your stop loss was 227. Okay, so I just would have used the 226.91. I guess the opening high was 226.99, so you're using 227. You're just giving it the extra 8 cents to the high of the day. I'm fine with that. When it got about $2.30 in the money with my 1 unit left, it bounced back to the 21 EMA. Okay, fine, no big deal. And I covered the rest there. I don't like that. I'm trying to get clear on when to let it breathe. I'm assuming that you're telling me that you covered it at 10:10 a.m. candle and not 10:25 a.m. candle. Maybe you can confirm that for me. Let me read the rest of what you said here originally, though. I'm trying to get clear on when to let it breathe versus when to lock in profits, since the trailing rule didn't apply cleanly here. My question is, in that situation where the instrument hasn't made a clean lower low, would need to break below 221 for that, which is the low of the day. I don't fully agree with that. What's a good risk-reward stop? You got stopped at a 10.25. Okay, great. I like that. So a couple of things here. One is I don't at all like the concept of trailing based on a moving average. So I'm not sure if you got stopped out because it breached the 21 EMA, or if you got stopped out because it breached the high at a 10:10 a.m. candle. If it breached the high, if the reason was because you stopped yourself out on the breach of the 10:10 a.m. candle, that I like. That I'm actually totally fine with. Based on your trade where you shorted it here, I don't think that you need a new low on the day to really signal trend confirmation here. You had a high, you had a low, a immediate reactionary low. Then you got a little bit of a lower high and a little bit of a lower low. On a very, very small time frame, from 9:55 through 10:20, you do have a very small pattern of lower highs and lower lows. So I'm very fine with using actually the 10:10 a.m. high as a trailing stop. And if that's why you got stopped out at 10:25 on that last piece, I think that's great. Apple at its upside implied move now. Wow, I didn't think that report was good enough for that. I really didn't. Especially given how much it's run, but we might just see some continued hedge fund chasing. Anyway, I'm totally actually fine with that. Now, with that said, maximizing reward, right? That's really the goal here. It's kind of why I wish that you had kept that other unit too. Like after you're in the position where, so you want to be assessing a few factors, right? One thing to assess is today going to be a range day or a trend day, right? And we can't know that, but we can guess if they're on probability, right? And I would argue, even though this would be incorrect, that today had a higher probability of being a trend day. For all the macro reasons that I just discussed, a trend day for the market. Micron was not in play on its own today. So whether or not Micron trends is going to depend on if the market trends, or at least if semiconductors trend, right? But I would argue that today had a higher probability of being a trend day. Therefore, I think that means that you want to have a little bit of a greedier game plan than you would otherwise. So when we go back to the 2/5, right, you covered we're calling them units, 2 out of 5 units to cover your risk, a third unit incrementally a little bit below that. Now you turned your trade into a win-win situation no matter what. I love it. But now at that point, whether or not you're covering the 4th unit quickly and incrementally or not, I think should depend on your expectations of the reward profile of the trade. And if there's a chance that today could have been a trend day for the market, and I do think that there was that probability, or a trend day for Micron because the market is therefore trending, I would say you should not be covering that 4th unit. If today had a higher probability of being a range day, then it probably makes more sense just to cover that extra 4th unit, get the money in the bank, and now if you get stopped out, no big deal. You kept a 5th for the ride, and you know, and if it works, obviously that's going to be great too. And if you had that, you could have made your game plan moderately more complex, which wouldn't have helped you because it broke highs, but you could have, which, you know, hindsight's 20/20. It doesn't matter that it eventually broke highs. You want to do what's going to be right for the trade, what's going to have the game plan that's going to maximize your reward while minimizing your risk and be consistent with it. You could have trailed one here off the 10-10 high and given one all the way back to your original stop loss. If I only had one piece left in this situation, I personally probably wouldn't have trailed it. I probably would have, especially if I covered 4 out of 5, I probably would have given it all the way back to the original stop. If I covered 3 out of 5, I probably would have been trailing one and giving one all the way back to the original stop at that point. And that's just because at that point, I'm looking to maximize reward. I want to be greedy. I haven't said this term in a while, but it's a good one. You want to be greedy, not stupid, right? Stupid is you held 100% of the move because you thought that the market was going to go down 10% today, and you didn't cover anything, and you ended up taking a loser on it. That's not being greedy. That's being stupid. Being greedy is you are trading appropriately, but you have a game plan based on important pieces of information on why you think that this market could trend, where you're going to look to really maximize reward and look to be a little bit greedier. So I hope that helps. The only other thing that I would say here is I would still consider this to be a trailing stop here on the 10-10 high, not a risk-reward stop. When I refer to a risk-reward stop, I'm referring to something very, very specific. I'll try to give you an example. So on Micron here at 10.15, the low is 224.08. Let's say that you had a take profit bid for some reason at 224.01. And right now your stop is still all the way at 226.25, that trailing stop. You do not want to risk $2.25 to make an extra 7 cents down to where your bid is. So what a risk-reward stop is basically when you get really, really close to a bid. And I never do this, by the way, on the one-to-one kick, like the first kick to cover risk. I never really do this. But on like wider bids, wider covers, wider take profit orders, that's when I'll implement what I call a risk-reward stop, which is basically I'm not giving this thing back $2.26 to make an extra 7 cents. So I'm going to leave my bid, because obviously I do want to get filled on my bid. That's why my bid was there to begin with. I'll leave my bid at 224.01, try to make the extra 7 cents. But I'm going to put a buy stop at 224.26. So now it's like I still want to get filled on that bid, and I'm willing to give it 17 cents to try to get filled on that bid for an extra 7 cents. And one or the other is going to fill now, right? I'm either going to, my stop is going to cancel, and I'm going to cancel, sorry, my stop is going to trigger, and then I'm going to cancel the bid, the risk reward stop, or my bid is going to is going to get filled, and I'm going to cancel the stop. And that way you're not giving it all the way back. You know, it's just a stop purely based on risk reward, because you don't want to give it back $2.25 to make 7 cents, but you're willing to give it back 15 cents to make that extra 7 cents. That makes more sense. So that's what a risk-reward stop is. Otherwise, it's a trailing stop for me, or I'm giving it all the way back, or I have a game plan where I'm booking some degree of profit incrementally. So I hope that helps, Mr. TT, and I appreciate the question. I appreciate you bringing it to the table. All right. Yep, no problem. Reminder from Jim, tomorrow is in a tax loss selling for the mutual funds. Thank you, Jim. I'll let everybody read that on their own. Yeah, seriously. Let the American kids eat. Alright, not seeing any questions in the YouTube, but I appreciate everybody's help with helping me get the audio running. I don't know why that happens sometimes. Computer restarts and the audio doesn't work. But it is what it is. I don't see anything else from the VTF either. So, I can't believe this Apple's up here. I didn't think that report was good enough for that. Record revenues, though. Record everything. But it's not a huge, crazy beat on expectations. after the market already brought this stock up so much. But, wow. Look at Apple go. Look at Apple go. Certainly helping the NASDAQ. The Q's fully retraced today yet? Almost. The Q's are... Oh, no, they're not. We're still $1 away. But we've retraced most of the move in the NASDAQ from intraday. The big bear move from my big bear meeting. Tim Apple saved the day. We are working our way back to our day highs in the NASDAQ. That is just incredible. Just incredible. Have a great night, everybody. I'll see you all tomorrow.